Well, alrighty, checking connection. You are now live. Cool beans. Well, now we got 7 freaking cameras. All freaking righty. Come on. Alrighty, look who's here. Jimmy's here. Liquid KJ. Oh, at least it say KY. Kathy, how you doing? Bama Redneck, Go Man, D Coffee. What's happening? Vegas Knights. What's happening? Vegas Knights wants to take a look at Apple. I love. Way to go. Brandon's here. Hey, Brandon, how you doing? Yeah, me. What's hey? Picaris is here. Kathy. Well, hello there, Miss Kathy, and how are you today? Double jolly good. All right, we are going to get started. Uh-oh, what did you do? You just turned off. Oh, no. All right. All right, so let's get started. All right, everyone, I am James. It is, what's today? Today's Tuesday. Tuesday, August 13th. Tuesday, August 13th, 2024. Today, we are jumping in, taking a look at some safe, predictable, consistent ways to make a 1% per week return on your invested dollar. We are going to be talking about dividend stocks. We are going to be talking about, hey, Coffee Break Logistics, what's up? We're going to be talking about dividend stocks. We're going to be talking about stock options, call stock options. I don't do puts, so if you're interested in put options, yeah, I don't do that. Sorry. So that being said, let me get through some of the disclaimers first of all. Number one, I am not a legal anything. The only license I possess is the license to drive a vehicle. That's it. Okay, I'm not a financial advisor. I'm not a stock professional. I'm not, I don't even have a college degree. Didn't even go to college. Took the path less challenged. Or took the path less traveled. Cut out of high school, joined the service, got out and went to work for someone, started my own business, and things just kind of went from there. All right, that being said, let's get started. So what are we looking for? We're looking for a safe. Somebody wants to look at Starbucks and then Bowl. Hold on, let's write those down. Starbucks is on our list from yesterday. Nope. Starbucks, S-Bucks. Bowl. I never even heard of Bowl. B-O-W-L. Doc, I saw you sneak in there. What's happening there, Doc? Military branch. I was in the Army. I was a crew chief. Apple, that's the was. A-A-P-L. Yeah, I was a crew chief on helicopters. You know that idiot you see on the side of the Hueys sitting there in the seat looking like an idiot? That was me. Yeah, crew chief. Anyway, flew all over the place. All right, so we got a couple stocks to take a look at. First of all, I do suggest you guys are very careful who you interact with on here because I have, and I find this rather flattering, I do. I have 27 people pretending to be me. So, if you get a text, an email, a Snapchat, or something claiming that they are me, well, let's get a couple things down right. Number one, I never ask people for money. Okay? You want to join my group? Hey, fine, join it. You want to buy some of my books? Fine, John. I don't push that kind of stuff. I'm here to teach you guys, and hopefully, maybe some of you will want to join our trading group in the mornings. Fine, if you do, great, not a problem. You really don't need it because everything you're going to learn is here. But as I was saying, 27 people pretending to be me. I find it a little bit flattering, a little frustrating also, because I do get emails saying that I done someone wrong, or somebody wants their refund from me that they sent to not me. So when I say this, if you really, really want to talk to me, send me your number. I will give you a call. As long as you are in the continental United States and I can make a phone call, not a problem. Other than that, I don't do Instagram. Oh, wait, sorry, I do Instagram. I don't do Telegram. I don't do Snapchat. I don't do Telegram, Snapchat. What's the other one? WhatsApp. Yeah, I don't do that. I don't do cryptocurrency. I don't do Forex. I don't do treasuries, I don't do bonds. The only thing I do here is dividend stocks and covered calls on dividend stocks. It's safe, it's predictable, it's consistent, and if done right, there's no way to lose any money. Well, the only way you can lose money if the company goes bankrupt. Deer killer. It's kind of funny. Well, think about it. It is kind of funny. 27 people pretending to be me, and you probably get an email, a text, or something, say, hey, this is James from Dividend Stock. I got a great deal for you. Yeah. No, that ain't me. I don't do that. I tell people, you really want to talk to me? Send me your number. I'll give you a call. If not, just text me right here on TikTok or whatever these things here. All right. That being said, hopefully that's all the disclaimers, and hopefully you guys will do research. Don't listen to a damn word I say. I don't know shit. Really, I don't. I'm not a college graduate. I look at numbers. Okay, I will read you the numbers. I will interpret the charts for you. I will not tell you what to buy. I will not make suggestions. That is not what I'm here for. I'm here to show you what I do. If you are so inclined to copy what I do, hey, more power to you. Now, let me tell you how this got started. In 2008, after what do you call it? The financial world kind of imploded. Well, my daughter wanted to do what I was doing. I was trading stocks even back then. Okay? Even during the, what do they call it? The '08 crash, the financial crash. Yeah, I was still trading stocks back then. Hello, how are you doing today, James? I am wonderful. So here's the thing. When she was 9 years old, remember, she wasn't a Mensa student, so some of you might or may not know what a Mensa student is. Okay, extremely bright honors classes, stuff like that. No. She's just an average, everyday girl. That's it. Average girl. That's it. Okay, so in order for her to trade, in order for me to teach her how to trade, it had to be simple. And I can't emphasize this more than I'm on. I can't emphasize this more than what I'm trying to do now. Okay, simple. Okay, as adults. Now remember, my daughter was 9 years old. So when I say simple, hey honey, do this, fine, that's what she does. But us adults, we want to complicate things. We want to add stuff in there that really doesn't need to be added. All right, simple, safe, predictable, consistent, in no way that my 9-year-old daughter could ever lose, other than doing something stupid. Now what I mean by that? Well, unless she buys something instead of selling something, or she sells something less than what she's supposed to, it was certain criteria. Simple, safe, predictable, consistent, no way to lose. Great. 5 rules. Now the 5 rules are also very important. Rule number 1, never buy something you do not understand. If you don't understand it, if you can't give me a 30-second elevator pitch as to why you bought it and why they're such a great company, then don't buy it. Okay? Always buy as if you're going to buy it and hold it for the rest of your life. That's the intention going in. Now, I do weekly trading. I buy on Monday. I like to be out on Friday. I go in. Can you do this in a Roth for tax purposes? Yes, you can. However, I would suggest you not do it in a Roth. I suggest you start up a company. That's where I messed up. Sorry, Kathy. Now, that is a topic of another conversation, how you should set up. Let me get to the rules, and let me get you we'll get to that in a second. The 5 rules. Never buy something you do not want to hold on to. Always make sure it is something you are okay with buying and holding for the long haul. That's not what we're going to do. We're going to buy it with that mentality. Okay, so I'm going to look at a stock and say, hey, I like that. I want to own it, and I want to own it for a long period of time. I want to tell my friends at cocktail parties, yes, I own some of that. Okay, that's rule number 1. Never buy something you do not understand or you do not want to hold. All right, then, I guess that is not working. We're trying to get onto Rumble tonight, so I get 7 cameras going tonight. That's kind of fun. Where is it? Rule 1, never buy something unless you really understand it. Rule number 2, never sell at a loss. It kind of defeats the purpose. Why buy something if you're going to sell and lose money? No. If you buy something and it goes down and you want to get rid of it and you contemplate getting rid of it, well, then you misunderstood rule number 1. Okay, most people jump in, buy stocks, and they hold them for years. Okay, I'm asking you to do it for weeks, a week, 2 weeks, whatever. Jump in, grab your premium, get on out, make your 1% and move on. Can this be used to make money and be saved for my future children? Michael, this is just a way of making money. Okay, this is not. Well, that's a conversation if you really want to talk about it. I have some really cool shit that you'd really like if you're interested in doing something for your future children. For when you're gone, which is what I'm doing. I'm setting up all my estates for my children and my grandchildren when I'm gone. I have one grandchild now. Let's get back to the rules. Okay, hold up with that stuff. Okay. Michael, send me your number. I'll give you a call. We'll have a chat. I have some really cool shit rattling around up here. You're only going to learn one strategy here, and that's it. So, rule number 1, never buy something unless you understand it. Rule number 2, never sell at a loss. Rule number 3, make sure the company is profitable. Make sure there are plenty consistent increases in their dividend. Excuse me. Now, when I say dividend, I don't want to read the annual reports. I don't want to read the quarterly reports. I don't want to be updated with letters to the shareholders. Nope, don't want any of that stuff. The shortcut to find out if a company is profitable is by looking how they pay out their profits. Are they taking the profits and put it back into the company for capital growth? If that's what you're looking for, you're in the wrong place. I do not do that. I do not do companies that do not have dividends. So if you're going to want me to take a look at a company, make sure it has dividends. I would prefer consistent increased dividends. Because looking at companies that don't have dividends, it's kind of wasting our time. And I really don't want to waste your time, and I certainly don't want to waste my time. Okay, I like 20 years of increased dividends. What is a dividend? A dividend is a portion of the profits the company makes, and they pass it along to the investors. And that's you and me. Once we start buying and selling stocks, we become the investors, the shareholders. So we are going to want to get a company to give us more and more money every year. So if you buy a company and it gives you a dividend, and that dividend increases year after year after year after year, I like 20 years consistently. Okay, now you're going to see throughout the night, some people are going to ask me to look at some stocks. I will. And they don't have increased dividends. Well, it's going to be a no. Okay, why do we want to waste our time? This is the strategy I like. Buy a stock, collect a premium or the dividend or the capital appreciation going into the dividend date. Okay, the name of the show is called Dividend Investing for Weekly Cash Flow. Dividend investing. So make sure anytime you ask me to look at a stock or my opinion on a stock, make sure it has a dividend and an increasing dividend. If it doesn't, I'm just going to make fun of you. I'm being honest. We're here to be entertained, and I'm going to entertain with anyone who gives me a lemon. And I will tell you right off the bat, that's a lemon, that's a turd, in my humble opinion. Now, there are hundreds, if not thousands, of trading strategies out there. Mine is simple, predictable, consistent, and there's no way to lose if you do it right. It was created by anyway. Rule 1, 2, 3. Rule number 4: make sure the company has weekly options. Now, I've done it over and over and over again. Companies that offer monthly options. Hey, Feline Vine, I made a trade today. Can you let me know how I did? But they'll get to that. I'm going to address that in a little bit. I'm still going over the 5 rules. Okay, rule 1, never buy something you don't understand. Rule 2, never sell at a loss. Rule 3, consistent increases in their dividends. I personally like 20 years. 4, weekly options. Now, there are options that are weekly and there are options that are monthly. I do not like monthly options. You can only do them 12 times a year. Best case scenario, I may get 12 to 24, maybe 26 or 28% for the year if I do monthly options. But I don't like monthly options because it's very challenging to figure out where are they going to be in 4 or 5 weeks. I have a hard enough time trying to figure out where a company's going to be in 4 or 5 days. Because I like to buy on a Monday, sell on a Friday, and be back into cash on the following Monday. Okay, I have a little ritual that I go through every morning. I get up, I check my stocks, I check my positions, I check what sold, what didn't sell, how much do I have to spend today. If I have nothing to spend today, well, there's no reason for me to jump online other than just check where everything is. how much leverage to start with. All right, Ford Fusion, if you're just starting out, or Ford Fusion 21, if you're just starting out, my suggestion, and I suggest this to everybody, I've been trading for 20 years, I still have a paper trading account, okay? Paper trade for a while. You can actually go onto Google and you can put in the search engine, where's the best place to paper trade stock market information. It's kind of like playing Monopoly with stocks. All right. That was rule 4. Rule number 5, I chose ETF just because it's not as much risk. Well, feline buying, okay, there is risk to an ETF. I'm going to get to that in a little minute, but I'm going to take a look at your stock in a bit. But let me finish up with the disclaimers and all that kind of crap. So where was I? Make sure the numbers work. Rule number 5. Okay, rule number 5. Make sure the numbers work. What company are we looking at? Walgreens. Now, when I say make sure the numbers work, they're basically pretty simple numbers. And there's nothing that I came up with. I'm just going to read the numbers that are available from almost any financial website you're going to find. First number is the last trade. At 4 o'clock this afternoon, there was a last trade of the day. That's it right there, 10:56. You go to any website in the world and ask, what did Walgreens close at? What was the closing price of Walgreens on August 13th, 2024? This number right here will live in infamy. For as long as people want to know any information about the stock market, well, do you remember 40 years ago, August 13th, 2024, what did Walgreens open up at? That number will always be there. The bid and the ask, they won't be there. The last volume, open, high, low, close, volume. Those are the 5 numbers that will always be around. Bid and ask, no, they won't be there. All these numbers down here, those won't be there either. Okay, so make sure the numbers work. What am I buying it for? 1058. Great. Now, if I'm going to buy it, I'm going to automatically do a covered call because it's one of the safest strategies there is. You buy a stock at a certain price. At this one, at the moment, 1058. Great. Tomorrow morning, if I buy it, I'm paying 1058. Great. Who can I sell it to make my profit right away? Remember I told consistent and predictable? Well, the 1050s are going for 19 cents. All right? But if I'm paying 1058, I'm losing 8 cents right off the top. I buy it 1058, I sell for 1050, I'm losing 8 cents right off the top. So the premium, 19 cents, I take 8 cents off of that because that's my loss. So I'm walking away with 11 cents. Now 11 cents doesn't sound like a lot of money, but that's 11 cents per share. So you get 100 shares, that's 11 bucks. You get 1,000 shares, that's 110. You get 10,000 shares, that's 1,100. So on and so forth. But that's not the number we're looking for. The number we're looking for, we take our calculator, clear this right here. Remember I told you after you deducted the 8 cent loss, okay, buying 1058, selling for 1050, 19 cents, take 8 cents off this, so I'm walking away with 11 cents. Great, so I'm putting 11 cents into my calculator, that's my profit. Now profit is derived by subtracting or dividing the purchase price, 1058, by the profit, okay, or into the profit. So I divide that 11 by $10.50. Why not 1058? Well, here's the reason why not 1058. 1058 is my purchase price. I'm losing 8 cents if I sell it at 1050. I'm already subtracting the 8 cents out of the equation, so I don't need to put it in there for a second time. Right? So I'm buying it 1058, selling it for 1050, collecting 11 cents as a profit. What is that profit? 1.04%. Now, that is for Wednesday, Thursday, Friday. That's for 3 days. Okay, I usually like to do my buying on a Monday because on a Monday I have 5 days of time value. Now, when you're dealing with options, okay, stock options, put options, call options, there's certain elements that make up the value of an option. Well, one of them is the current stock price. Another one is the amount of time left before it expires. Okay? Another one is the implied volatility. Another one is there's a whole bunch of elements to make up the stock price. And if you really want to know that, you can look up. You get your pen and paper ready. This is going to be a tough one. You ready? Black-Scholes pricing methodology for stock options. And you'll come up with this huge mathematical equation that tells you how they figure out these prices here. All right, it's called Black-Scholes pricing method, stock option pricing method. All right, let's continue. All right, that's the 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure they have plenty of increased dividends. Person like 20 years. Weekly options, monthlies just don't work. And then make sure the numbers work. The numbers, what am I buying for? What am I selling for? What am I collecting? Great. Before we finish, we move on over to the charts. Because just because the numbers are working and telling me I'm getting 1% or more, because that's what I'm looking for. I'm not looking for the dividend. We're going to get to that in a minute. I'm not looking for the dividend. I'm not looking for the stock to go up. I'm just looking. If I buy it, if I sell, covered call, am I making 1%? Great. That's the first part. Second part is, what is the chart telling me? Okay, you think it's not telling me anything because it doesn't have. First thing I want to see is where's the higher. Okay, if this is the year chart, okay? If I'm looking at a 1-year chart, 6 months chart, 90-day chart, 30-day chart, whatever chart I'm looking for, there's 5 elements I'm looking for. 1 is the high of the time period. 2 is the low of the time period. 3, where was it at the start of the time period? 4, where is it right now? And 5, what direction is it going? Those are the 5 things I want to take a look at. Okay, great. Well, this is the 1-year chart on Walgreens. The high was actually a year ago at $29.29, and the low was, what the heck is that? That's there yesterday. Last 30 days, right there. All right, the low was yesterday. Okay, so the 30 days ago, we're right here, 1160. Okay, she drops down to 1080, shoots on up to 1225, and then that's the high of the 30-day period, 1225. And then she drops to a 30-day bottom yesterday. 30-day bottom yesterday was $10.19. At this current moment in time, it is at $10.56. Now, you all know, you've all been here for a while, you do not make money in the stock market unless you buy low and sell high. Now, what is it about Walgreens that I like? Well, here we go. Walgreens has been in business for over 100 years. They have 8,700 stores worldwide. Yes, they get a lot of crappy news lately because there is a lot of, let's say, thievery going around, because the current administration does not want to prosecute theft under $900. They think it's a waste of time, so they let people steal $900. Walk on into the store, take $900 worth of crap, and walk on out, and they will not prosecute. What kind of a message is that sending? Well, corporate America is fighting back. Great, fine, we're going to get rid of 25% of our stores. Getting rid of 25% of the stores, you get rid of the ones that aren't making a profit. That kind of makes sense. But it's going to take some time. Now, they only said they were going to do this about a month or so ago. How long is it going to take a company that big to get rid of 25% of their stores? I'm not talking about 100 stores. I'm talking about 8,700 stores. That's a lot of stores. So you got to get rid of 25% of them. So what's going to happen with all that stuff? Well, it'll probably be moved to other stores. So that's going to take about 6 months to a year, maybe. So we may be seeing Walgreens floundering around this area for who knows how long. But they're a 100-year-old company, and they've got a Walgreens in every major city in the United States. And better than that, they're the last legal drug pusher. One of them, CVS, Walgreens, Walmart. That's where a majority of people get their medication. Okay. Okay, you know. All right, and I'm not even going to go into that. That's another political thing. I don't want to get into that. Jim, you're harvesting capital losses at the end, at the year end. That's stock trading 101. Well, I'm terribly sorry to inform you, Jim, but we are into August. I have 2 losses this year. That's it. Okay, and I got no problem whatsoever showing what losses they are. Here we go. Here we go. Get rid of this. All right. See the line right here? Profit and loss year to date. $13,000 loss on Wynn Resorts, but it's not a loss because I still own it, and I still bring in weekly cash flow from Wynn. So it's only a loss if I actually take it. Loss number 2, AEO, American Eagle Outfitters. It's not a loss because I still own it. Loss number 3, Kohl's. It's not a loss because I still own it. Okay, loss number 4 and loss number 5. That is Bitcoin ProShares ETF. We were doing an experiment on it, and it just wasn't working. So I got rid of that. So I lost $600. And then Able Mall lost $600. 2 losses since the beginning of the year. So no, I do not roll my losses into capital. What do you call it? Capital losses at the year end? No, I don't do that. Sorry. Sorry to disappoint you. All right. So let's get back to where we were. He said, chill out, bro. Pakaris, not quite sure. Hey, y'all, it's Meemaw. Ford jumped up today. We're going to take a look at, just for Meemaw, we're going to look at Ford. Okay. So let's go through 72 more questions. Holy cow. The broadcast that's showing the background, can you remove the little screen showing you? I could, but if I did, the long content in the YouTube, it wouldn't have me in it at all. So I need to be in one of them. So sorry about that. Can you name a few examples? Zach, sure we can. So as a novice investor, we should just use Sink or Swim website like you do. It's called Think or Swim, number 1. It is free. All right, you can download it onto your computer or your laptop. Okay, and this is what I've been using it for the past 20 years. Only because it has everything I want. It has the calendar, which tells me which stocks are paying their dividends, what dates. Okay, it has all the charts, and it even has seasonality chart, which a lot of companies don't have. And what's a seasonality chart? Well, it's a regular chart like everyone else. But this one, go January 1st, all the way to the left, December 31st, all the way to the right. The blue line represents the movement as this year. This is exactly where we are right here in the middle of August. The red line up top represents 10 years worth of average movement. So what does that mean? 10 years of average movement. Well, 2014, 2015, 2016, 2017, 2018, all the way up to the current year. Average movement. I want to see this area right here because this is the second week of August. So I want to zoom in, click left, drag right as that lights up. That's 2 weeks. As you can see, let me bring this up right there. Here's where we are. What happens to Walgreens usually this time of year? Well, it's a downtrend. But here's the thing. That is just historical performance. That's not guaranteed of where it's going to go. So what are we looking at? More than likely, the trend, or what the buyers and sellers are doing, that's you and me, we are the ones that make up this mess here. We decide, oh, that's too high, or, oh, wait a minute, it's all the way up here, I'm going to take my profits. We decide what's too high, and we decide what's too low. Because there's always going to be someone buying, and there's always going to be someone selling. Okay? The person who's the referee there, between the buyers and the sellers, that is the market maker. He is the one who creates the store for us to buy. Think of the market maker as the grocery store on the corner street, Circle K, Quick Stop, Piggly Wiggly, or whatever. Whoever owns the store, he's the market maker. He buys a gallon of milk for $3, he sells it to you for $3.50. He buys a loaf of bread for 98 cents, he sells it to you for $1.25. He makes the difference between what he pays for it and what he sells it for. Exact same thing with the stock market. You have the bid, that is what the market maker is paying me to buy my shares, and the ask, this is what he is selling it for. So if I want to buy it, I got to pay this price. If I want to sell it, this is the price I'm going to get. The bid, the ask. And it's the same thing with the options. The option, there's another market maker. Because you got to remember, stocks are traded usually in New York. Options are usually traded in Chicago. Okay? Anyway, let's start looking at some stocks. SPYI. Oh, Andrew, I asked you nicely to give me good stocks to take a look at. And Zach, we're going to show you a few examples right now. So, Mini Split Master. Yeah, I'm talking about, you can do any trading platform you want. I just happen to like this, and I've been trading for a long time. I've seen a lot of different trading platforms. This one has by far the most perks I have seen from any of them. Okay, so I don't know any other company that has seasonality. I don't know any other company that actually has the calendar the way this one is set up. Now, there are some that do have calendars, dividend calendars. Okay, those are good. But the trigger trade, I haven't seen a single company that offers the trigger trade. And that's not something I go through here, but that was a major factor in me choosing one. Okay, SPYI, Andrew, I really don't want to look at it, but I will because I need someone to pick on tonight. SPYI, I'm going to put your name next to it, Andrew. SPYI. Because, oh hell, let's just do it right now. I feel like picking on someone. Now, when I say SPYI, I like companies that have weekly options. SPYI has monthly. Just not, the numbers just don't work. Okay? $49.75. If I buy it at $49, look what I'm getting. If I buy it at $49, I'm getting 10 cents. Well, if I buy next month's, the $49 is going for 80 cents. Well, you're going to say 80 cents. Well, that's great. Yes and no. 80 cents is a little bit, not even 2%. But look how long you have to hold it. 38 days. That's 5 weeks. So you get the not even 2% and you divide it by 5. Can you go over the trade? All right. So let me finish picking on you because I'm not quite done. Show you why I really do not like these. Okay. SPYI. And here we go. We are actually in Yahoo Finance. Now, you can get your financial information from anywhere. I just use Yahoo Finance because it's easier for me because I've been using it so long. I know where everything is. You can use Google Finance. You can use any finance. You can use Moody's. You could use anyone you want. But let me give you some of the information that I'm getting from Yahoo Finance on SPYI. First thing I want to take a look at is the dividends. How often do they pay dividends and how consistently are they profitable? All right. So, SPYI. Let's go all the way. Come on, that can't be right. That can't be right. Tell me this is not right. It is right. Holy shit. All right, you ready for this? What the hell are you thinking? This thing has been open since 2022. That's 2 years. You're putting your money in a 2-year-old company. 90% of all companies don't make it past 3 years. But you're putting it into this one? It's only been for 2. Yeah, okay, whatever. All right, dividends. 2 years ago, 49, 47. That's going backwards, isn't it? 48, 46, 47, 48, 49, 50, 51, 49, 47, 48, 49, 51, 50. Yeah, there's no increases there. No, well, all right, hold on a second. 2022 is around 47, 46. 2023, 48, 49. 2024, 50, 51. All right, I'll give you that. 3 years. It makes my flesh crawl. Okay, wait a minute. I'm not done. It gets worse. All right, let's go here to the summary. The summary is going to give us the yield. So if you dump your money into SPYI, lately they're giving an 11.74%. Okay, that's not that bad. It's better than a savings account, better than CDs. It's better than government bonds. It's 11%. It's less than 1% per month. All right, so I'm here teaching you, or for free, no strings attached, how to get 1% per week. And you're telling me you would prefer to get less than 1% per month? You're wasting your time, dude. You really shouldn't be here. If this is what you think is a good place to put your money, more power to you. I like companies that are 20, 30, 40, 50, 80, 100 years old, that have been in business and are consistently profitable. I have companies that have consistently increased their dividends to their shareholders, which means they are consistently profitable year after year after year after year. I think 67 years is the longest run. I think that's GPC, Genuine Parts Corporation. 67 years. You're looking at this, and they're giving you 11.7%. Fine, okay, 1% per month, okay, but they're only 2.5 years old. Okay, GPC has been increasing their dividends for almost 7 decades. That's a safer bet for me. Now, you may be younger and you be saying, hey, I'm fine. I'm looking for capital appreciation. If that's what you're looking for, you're in the wrong place. This is slow, this is boring, this is monotonous, and this is the same thing over and over and over. This is what monotonous means. I don't know why I went through it twice. But I'm going to look at stocks 4 times a year. Same stocks all the time. Now, if you think about it and do the math and actually look, now we looked the other day, there's 9,598 companies you can invest in at any moment. So why are you investing in something that pays like this? The consistency of the increases in dividends should give you some kind of a clue that they're not consistently profitable. If they were consistently profitable, the dividends would consistently increase, not go up, come down, go up, down, up, down. No, the dividends should increase consistently. All right. I think I picked on you enough. So, in short, that's a no. SPYI is a no. Picaris, can we go over the dividend calendar and when to buy? I'm still a little confused on that. Reality can't cook. Really can't cook. NQ. I have no idea what NQ is. Now, if I say there's something I have no idea what it is, it's usually going to be a no. Oh, no! Don't tell me I just got... Okay, it's still on. NQ. What the heck is NQ? NQ Mobile Inc. Yeah, it has no options. Sorry, that's a no. What did you say about Starbucks last night? I think Starbucks is on our list. Would you want to live in Girl? Cool. Have you looked at Starbucks since the management change announcement? No. Oh, wait a minute. That was this morning. Yes, we looked at it this morning, and it jumped really big this morning. And I just have to have some. How do you reduce your losses and maximize your gains? That's a good question there, Mike. Do you see most retailers making this cut on unprofitable stores, especially with theft on the rise? Grant, yeah, you're going to see a lot of stores shutting down. CVS is shutting down some. I've seen some Walmart shut down. Okay, but I think the biggest one is Walgreens. All right, so what are we looking at the moment? I'm at a loss. Isn't that weird? All right. So, Michael, how do you reduce your losses and maximize your gains? Michael, I'm not going to lie to you. Okay, I have a couple of companies that I've had for longer than I want to have them. Okay, AEO. Okay, I originally got AEO at 20. Well, so no, at 26. Let's pull it up. AEO. Now, I originally got it at 26, way up here. Don't ask me why or how I bought it at 26. I usually never buy at the high, and I don't know what the hell I was thinking when I bought it. Alright, there, I said it. I made a mistake. I do make mistakes. But I have AEO. I bought it at 26. She dropped way down to here. I dollar cost average down around here. So now my dollar cost average is 23. And I've been trying to get rid of it, because I don't sell at a loss. So I've been trying to get rid of it for the past couple of months. But she keeps going down. But now she's on her way to the upside. Okay, great. AEO a year ago was at 15.83. Bottomed out at 14.39. Topped out in beginning of March at 26.47. All right, 26.47. Last 30 days. Okay, here's the last 30 days right here. 30 days ago, 20.50, drops down to 19.50, shoots on up to 22.50. Now, 22.50 from 19.50 is a $3 move. It doesn't sound like a lot, but that is 15%. Okay, a $20 stock, $2 is 10%, $3 is 15%. So it's a 15% increase. Okay, great. Profit taken. Drop down to 18.75. Here's your 30-day bottom. 1, 2. That's when I jump in. 1, 2, 3, 4. So it's 6 days to the upside. Great. Is it going to continue going up? Now, I sold, I believe, the 21s. Yep. I sold the 21s on Monday. Okay. Sold the 21s on Monday, and I collected 63 cents a share. That's 3%. All right. Well, I sold it at 63. Right now it's at 66. More than likely, I'm going to end up buying it back because I do not want to sell at a loss. So as the stock drops, I do lower the covered cost. Now, as I lower the covered cost, my increase my increase. No, my risk. There you go. My risk increases. So my stock price, purchase price, originally was 26. I bought some more at 22, so my average price is now 23. 23.65. So my 23.65 is not even on this chart. That's how far away it is. So yeah, I sold the 21. It's got 63 cents, and that's over 1%. But I might have to buy it back. All right. That's how I now, Michael. I mitigate my losses by consistently looking. Normally, okay, before I started this channel here, normally I'd only look at my stocks, 10-15 minutes a day in the mornings, during the weekdays. But now that I'm teaching you guys, I look at the stock twice a day. Once in the morning with my trading group, and then once at night with you guys. So, I'm constantly aware of what's happening with the stock. Now, I am also aware that it is currently at 21.45, which means I am susceptible of losing, but not really, because it's at 21.45, and the person who bought the option from me paid 63 cents a share. So that person's break even is 21.63. So I still have a couple more days to see it play out. Is it going to keep going up, or is it going to turn around and come back down? But I look at it twice a day, so I'm okay with what it's doing. So let's go and take a look at some more. Randall Ray, my Walgreens cost basis is $13.50, but options aren't paying unless you do 11s. That seems risky. Walgreens, hold on. WBA. All right, Randall Ray. It's at 11.56 now. What's wrong with the 11? The 11.50s are horrible. That's only 3 days away. Look at next week's. Next week's is the 23. Because we're into Wednesday. You've already lost 2 days of time value. There's only 5 days of time value. Monday you get all 5. Tuesday you get 4. Wednesday you get 3. Okay? So you have 3 days of time value for this week. But yeah, jump on next week. Look at next week. Next week the 11.50s are going for 2 cents and the 11s are going for 8. Okay, 11 is way up here. Alright? I don't see it hitting 11 this week. But next week, yeah, probably. Tomorrow and the next day will give us a better idea what's happening there. Mimi, nice to see you again. I remember you here once before. Drazik, it's nice to see you here before 11:15. I know someone that can get you a better deal. A better deal on what? I'm not quite sure, but always willing to listen. Thoughts on Tree. I've never heard of Tree. So, you know what? If I've never heard of it, usually it's going to be a no. Monthly. I don't do monthlies, and apparently you weren't listening when I said please do not send me companies that have monthly. Waiting on Bowl. Are you really? Bowl. B-O-W-L. That's a no. Bowl is a no. When I say I'm looking for companies that have weekly options, okay, Bowl is monthly. I don't do monthly. They just don't pay. Okay, so Alex, if you like Bowl and you're saying they just started paying dividends, okay, yeah, I will look at them in 18 or 19 years, but at this moment in time, it's a risky proposition. Yeah, you might make money if it goes up, but if they're paying dividends, well, then they're taking the profits and giving them to the shareholders. They're not putting it into the company for capital growth. So you got a long way to go, brother, with that company. But everyone's different. Different strokes for different folks. All right, ground control. Okay, user 613. Can you move the picture on YouTube on the right side of the screen? It covers information I want to see. Okay, hold on a second. Let's see what information it's covering. Alright, it's my website, The 10 Minute Trader. I'm going to take a look at all my other websites. YouTube right there, that's on my social media. So I'm not quite sure what information it is that it's covering. Take a look at all my other websites. YouTube right there, that's my social media. You gotta mute it, you don't want to hear that backlash. Okay, so let's go back here real quick. And what information is being screened out? So I'm not quite sure what information it is that it's covering. Alright, I'll make that a little smaller. You gotta mute it, you don't want to hear that backlash. Okay, so let's go back here real quick. And what information is being screened out? So I'm not quite sure what information is. Alright, that should do it. Alright, that should do it. Hopefully that works. DXCM. Again, I guess DXCM. Another person not listening. Okay, DXCM. Dexcom Inc. Okay, it actually has weekly options. Alright. Weekly options. Great. Let's see how quick they are with their dividends. Okay. DXCM. Now I gotta apologize to you guys because you may think I'm ignoring your questions. I'm not. I have 99 questions I need to get to. So you gotta give me a little bit of time to get to them all. DXCM, Dexcom. No dividends. Hell no. Come on. If you're gonna ask me to look at a stock, make sure it has dividends. Target, Joey C, AT&T. I think James forgot about the chat. No, I didn't forget about the chat. I just have over 100 questions on TikTok I need to get to. And somebody wants to take a look at Target, TGT. All right, great. All right, now I told you I was going to take a look at yours over here. So let's take a look over on Yahoo, on YouTube, for your kind of questions. All right, why does Robinhood say max loss unlimited when select to sell a short call, a covered call? Well, Anytime you buy something or sell something, you're going to run the risk of something going wrong. So hypothetically speaking, DXCM, if I bought it, there's a chance that it might go bankrupt and I might lose everything. That's the chance you take. So this is why I only pick companies that have 20 years or more of increased dividends, because they've been around for more than 20 years. Now, some of the companies I do, like take a look at Consolidated Edison. Consolidated Edison has been around for 200 years. Please scroll up to the beginning. I asked questions earlier on. Well, let's take a look. The very beginning. Holy cow. Okay, I got Bird Turd there asking me stupid shit. I made a trade today. Can you let me know how I did? I bought IWM today, August 16th at 207, sold at 207.50, got 267. Well, that all works. IWM. I never heard of them. IWM. Really? Come on. All right, this one actually has daily options. IWM. IWM. All right, I want to see what kind of options they're actually paying. Oh my God, really? Did you even check the numbers before you bought this piece of crap? I'm calling it that because look at what they're offering. 1.18%. Your money that you just put into this company is gaining 1.18%. You're actually losing money with this company. The inflation, I'm not going to tell you what the inflation is, but I can almost guarantee you with 100% accuracy, inflation this year is more than 1.18. You're actually going backwards with that investment. Terribly sorry. Okay. Now, you might make money off of the, well, before I continue on that one, let's see how much dividends they've been paying out. Dividends only. Maximum amount of dividends. All right, you're not going to like this at all. All right. All right, so they've been paying dividends since 2000, which is 24 years. 3 cents, 18, 22, 10, 14, 15, 14, 6, 12, 13, 19, 8, 12, 19, 12, 10, 15, 13, 21, 27, 15, 20, 26, 17, 11, 15, 16, 20, 27, 11, 26, 14, 18, 15. Oh, hell no. Okay? Yeah. I'm sorry, kiddo. Really? Did you even look at the numbers before you bought this thing? Okay, this is your money. All right, you can do anything you want with your money whatsoever. It's an ETF. You're giving your money to a computer. Okay? You're saying, hey, I don't want to do this. You do it. You're actually losing money. Inflation is more than 3%. Whatever government wants to tell you is a load of shit. Okay, you go to the grocery store and you take a look at your receipts from 4 or 5 years ago. You take your little receipts, nowadays, buying the exact same stuff. A lot of studies have been done about this. Okay, we take grocery lists and prices from 5, 10, 15 years ago, or even 4 or 5 years ago, and comparing them today. Your inflation is a hell of a lot more than 1.18. I have to move on. I can't. I can't comprehend why somebody would do that. But okay. All right, Joey, you want to look at Target. Justin wants to look at AT&T. Greg, I'm going to tell you right now, PLTR doesn't pay dividends. You really want me to pick on you, brother? How am I losing? I bought an ETF for a quick covered call. I made 1.39. Yeah, for the covered call, fine. It's great for a covered call. But if you're planning on keeping that company for a long period of time, what happens if it goes down? Okay, yeah, you already got your 1.39%. Great, so you made 1.39% for the week. What happens if that ETF goes below your call strike on Friday? Well, you either got to sell it at a loss or you got to carry it into next week and hope that it hits your target next week. Okay, I always look at absolute worst case scenario. So if I buy a stock and it goes the wrong way, well, My saving grace is I'm getting higher and higher dividends every year. Well, next year I'm getting a higher dividend. Year after that, I'm getting a higher dividend. And I'm still collecting covered calls. Okay, you can collect covered calls against your ETF. Okay, but you're not going to collect any dividends, and there is no recourse. Okay, sorry. I'm glad you made money on it. I really am. Okay, but I would never have picked it. I would have picked something that has historical performance behind it, better historical performance. But it's less risk than an individual stock. Since it's an ETF, a stock might take a while to recover. Okay, I'll give you that one. Okay, but hey, here's one. If it works for you, great. More power to you. Okay, every once in a while, I do take a look at ETFs, and I look at them for a different type of strategy. Not that one, but still. Andrea, you want to take a look at Macy's? Okay, cool. TFAS. Give me 1 second. I'm going to write Macy's down here. Let's take a look at that one. Oh, God. I got to drink my toilet water. Gross. Oh. Yep, just as bad as it was last night. But it does help out with the cough. All right. Interactive. I'm talking about Interactive Broker, I'm assuming. If I buy one call contract for 30 cents at a strike price of 5 and am out of the money, do I owe 50 or 30? Well, the call strike number 1 that you're talking about, if you buy the option at 30 cents, well, that's 30 cents per share. That's $30. Okay? Because you're buying 100 shares. I mean, you're controlling 100 shares with one stock option. So the one stock option at 30 is $30. Okay? Now, the strike price of 5, that only gives you control of that stock at $5. At 5. Okay, that makes sense? Interactive. Carvana. All right, Julie, you want to look at Carvana? It doesn't have 20 years of increased dividend. That much I know. They haven't even been around for 20 years. Okay, Justin, AT&T is on the list. We'll take a look at it. Andre, Thinkorswim, great. Trading View, second. I've never heard of Trading View. I'll take a look at it. Let's look at Macy's, please. We're going to look at Macy's. Let me just go through. I have 100 questions to go through. Mr. O, Tesla's a no. Ooh, you like that? Mr. O, Tesla's a no. The reason why Tesla's a no, they do not share their profits with their shareholders. They take all the profits and put it back into the company. If that's what you're looking for, that kind of a deal, where you buy Tesla and wait to go up, yeah, you're in the wrong place. Okay, I only do covered calls on dividend stocks, and Tesla is not a dividend stock. Can you run again through the math how to calculate? I think my math gets messed up if the strike price is higher or lower from the purchase price and the impact. Okay, take a look at that. I should not be. Yeah, you should not be confused about this. All right, Mr. O, you must be new. Tesla's a no. Andrea, can we spend time on upcoming companies in business over 10 years? Well, yeah. Look above. Yeah, I saw that one. Okay, Justin, I told you we're going to look at, you know what, let's do AT&T. Let's satisfy Justin. Okay, Justin, you ready? AT&T. Not this week. Sorry, brother. Too high. Okay, don't get me wrong. I love AT&T. It's been in business for over 100 years. 1954, the 1950s, going for 24 cents. That's over 1%. Great. But it's too close to the high for me. If you like it, more power to you. But stocks go up, stocks go down. Stocks go up, stocks go down. Stocks go up, stocks go down. Stocks go up. Where do you think it's going next? Come on, let's use a little bit of logic here. Okay. Nucor. Ooh, I haven't looked at Nucor in a while. N-U-E. Nucor, 143. High, low, where was it? Where is it? What direction is it going? I want to look at it right here because it looks like it has a new bottom right there. Okay, this is Nucor. All All right, a year ago, 174 bottomed out 139, and that was back in late October. Okay, topped out at 203 in the beginning of April. But from there, she kept dropping and dropping and dropping and dropping. And oh my, dropping and dropping. All right, so 30 days ago today, here's the last 30 days. First thing I want to see, high, low, where was, is, and what direction is it going? Okay, so 30 days ago we're at 164. We topped out right here, 167. Okay, she drops a little bit, a little retracement, and it finds the 30-day bottom yesterday, Monday. Now, I like Nucor. Nucor is on my list. All right? Now, Drazik, we're going to go over the numbers. Are you ready? First and foremost, Drazik. Okay? First thing, look at the stock price. 143.00. 1% of 143.00, you take the decimal point and you move it over 2 spaces. 1.43 is 1%. Okay? Now, at 143, the 143 is going for 285. Now, is 285 higher or lower than 143? There's your answer. Okay, that's over 1%, close to 2%. Great. Let's take a look at the chart. Joe Sullivan, how are you today? Hey, Joe, we already looked at Ford. Oh, wait a minute. No, we didn't look at Ford yet, but Ford is on the list. Joe, don't go anywhere. All right, so yesterday was a 30-day bottom. I like 2 days to the upside before I jump in. So I'm going to write Nucor for next week. Reason being, if she goes up again tomorrow, that means Thursday or Friday will be a good buy-in day. I'm out of money this week anyway because all my money is invested on Monday and Tuesday. So I'm going to write Nucor down for next week. N-U-E. Alright, so we'll take a gander at next week to see what it's doing. And then you guys come back next week and see if Nucor is a yes or a no. It's a yes usually, but I want 2 days to the upside to make sure that this is a bottom and it's not going to keep going down. So, Andrea, that was one for you right there. Nucor is over 10 years old, okay? And the pricing is right. Justin, I'm going to ignore you. I'll do 1% per week. Hey, Sage, how are you? User 7472. Let's take a look at Kohl's. Kohl's, KSS. KSS. All right, we'll take a look at Kohl's in a little bit. What the heck is TXN? How do you get 1% every week from the dividend or the premium? Okay, Joey, I usually get it from the premium. Let me show you. And right here, now we like Nucor, but we don't like it for this week. It might be a good play for Thursday or Friday because we're waiting for another day to the top side. But look at the numbers, Joey. If I'm buying it at 143, I sell it to somebody at 143, or I use a covered call. It means I'm selling my rights. So now somebody has the right to buy it from me at 143 anytime from when I sell it until the expiration. And the expiration is 23 August, which is next Friday. Now this Friday, which is 3 days away, the 143 is going for 170. See? 170, 143. That's over 1%. So that answers your question. How am I getting 1%? Well, if I'm buying it at 143, selling it at 143, and I'm collecting 170 as a premium, that's my profit. That is over 1%. If I buy enough of them, fine. 98% of all my money is invested at all times. I carry about 4 to 5 positions on each account. Okay, so each account is usually tapped out. This one here, well, I'm negative 13,000. Okay, that means some of the stocks I've sold have dropped. All right, that's that one. This one here, okay, this one here, let's move it over a little bit. Ooh, holy shit. This one's got 35,000 in it. Let's buy something tomorrow. Okay. So apparently, This one's got 35,000 in it, and we're going to have to figure out something to buy tomorrow. Okay, that's that one. This one right here. This one right here has got 39,000 in it also. How the hell can that be? Cool beans. Ooh, I got a bunch of stuff I have to sell. All right, anyway, let's get back to where we were. So, that being said, I got some trading to do tomorrow morning. All right. All right, let's keep on moving. TXN. Is that Texas Instruments? TXN. Okay, Texas Instruments is on my list. Okay, let's take a look at the numbers, because that's the first thing I want to see. Well, second thing I want to see. First thing I want to see is high, low, where was it, where is it, what direction is it going? Look at that, that looks nice. Okay, numbers. I'm going to buy it at 198. The 197.50 is going for 235. That's over 1%. Simple math. If I move the decimal point over 2 places, it's 1.98. That's $1.98 is 1% of $198. The simplest way to do it, just move the decimal point over 2 places to the left. $198. You move the decimal point over 2 spaces, that's $1.98. What is it going for? $2.35. That's over 1%. Fine. Let's keep on going. A year ago, 167.84, bottomed out the end of October at 140. Topped off at 211. That was midway through July. Okay, so here's your high right here for the year. High of the year, 210. 210.97. Okay? 3 weeks later, we have our 30-day bottom on Monday. 1, 2, 3, 4, 5, 6. 6 days to the upside. Does it have 3 more days to the upside left? I'm saying sure. Look where we are, 197. The high is 210. There's still plenty of space, and it's in an upward trend. But what does it normally do this time of year? For that, we want to take a look at seasonality. Where is seasonality? Seasonality, right here. What does it normally do this time of year? This time of year, she's flat. Okay, just no big moves to the upside, no big moves to the downside. It's nice and flat. All right, I still got like 100 questions to go. And you guys keep coming up with more questions. Macy's. Andrew, we're going to take a look at Macy's. Uh-oh. Don't you take a loss every time you buy it back? Not really. I don't, because when I buy it back and I roll it forward into the next week, then I still make the profit. Decreases a little bit because I had to buy it back. Why not just roll it? Well, Fonz, that's exactly what buying it back and roll it forward. Best stock for the rest of earnings. Sam, not quite sure how to answer that question. Dave, is this software free? This is not really software. This is a trading platform. Okay, this is through Charles Schwab. Now you can go to thinkorswim.com and download this for free onto your computer, Apple or Android.
Hey, I'll open your window in the morning if I remember, so that way you can talk to your rabbits. Yes, I'm sorry.
I'm not quite sure how he got on there, but all right. All right, Andrea, that's like the 5th or 6th question you asked me about Macy's. All right, satisfy your curiosity. Here's Macy's. A year ago, Macy's was at $15.50. Bottomed out at $10.59. That was in October. Topped out $22.08. That was in March. Last 30 days. Here we are right here. 30 days ago, before the big drop, right up there, $19.50. Bottom was last Monday. 1, 2, 3, 4, 5, 6 days to the upside. There you go. There's Macy's. It looks lovely. I actually own Macy's in 2 or 3 accounts. Now, take a look at seasonality for Macy's. What does Macy's usually do this time of year? This time of year, as you can plainly see, it goes to the downside. Now, that's historical performance. Okay? That's what it usually does this time of year. And Macy's is another one of those stores, or another one of those companies that is cutting out the losers. Okay, you're getting the companies are looking at those stores or those places that have a lot of theft and they're actually losing money. So Macy's is losing money in a lot of stores, so they're cutting them out also. Walgreens, CVS, Macy's, Walgreens, CVS. I think there's a few more other companies that are cutting out some of their losses. All right. FDX. Gallant wants to take a look at FedEx. Gallant, how are you today? It's nice to see you here on time. You know that? But I understand. People get busy. All right. First thing I want to see, the chart. High, low, was, is, direction. Simple. It takes not even 2 or 3 seconds. High, low, was, is, and the direction. Cool beans. All right. So FDX 284. 83, yeah, 283, 283, 85. Yeah, not quite there, dude. The numbers just aren't working for FedEx. Sorry, Gallant. Look at the numbers. Okay, the bid 280, the ask 292. Yeah, those aren't real. Okay, now usually when the market is open, there's usually a 1, 2, 3 cents difference, not $10. So if we look at the last traded price, 283. And we still look at the 283, look at the 282.50, yeah, that's not giving me 1% because I'm losing money. The 285, that's not giving to me either. But if I look at next week's, the 285 is giving me the money next week. So if I look at it for next week, not for this week, that's a different story. Okay, so a year ago, 266. Bottomed out in October, 225. Topped out at 313. Now, I want to open this up to you, show it to you, just so that you can see. Gaps have a tendency to fill. This gap over here between 255 and 295, look at that big jump. That gap is going to fill eventually, which means this baby's going to come down eventually. But look where she is now. Okay, last 30 days. Okay. 30 days ago, we opened up at 346. Okay, 313 was the high. Okay, here's your bottom right here, Friday. 1, 2 days to the upside. This is what I call perfection. Okay, you're getting over 1%, not for this week, but for next week. So if I buy it tomorrow morning and I sell next week's, okay, I'm getting over 1%. And look at that, 2 days to the upside, and look at all the space you have from the 30-day bottom to the 30-day top. That's a long way to go. That's a lot of in my humble opinion. I could be wrong. I have been wrong many times. Luga Baruga. Interesting name, Luga Baruga. What about ExxonMobil? Ooh, I like ExxonMobil. So, let's put on XOM. Alright. Let's take a quick look at ExxonMobil. XOM. First thing I always want to see, high, low, where was it, where is it, and what direction? Look at that direction. Doesn't that look sweet? Going to the upside. Wonderful. Next thing I want to see is the numbers. If I'm going to do a covered call, if I'm going to buy the stock, sell the option, 18.27, the 18s are going for 80 cents. Not even close. So we're going to say no to this week. Next week's 118s are going for 130. Alright? So I'm losing 27 cents right at the top, selling the 118s. That's going to bring me down to $1. That's not 1%. Sorry. I like ExxonMobil. Really, I do. And most of the time, it's a yes. But this week, the numbers are a little skimpy. So it's going to be a no for me this week. But, we'll come back and look at it another time. Look where the chart is right at the moment. 30 days. Here we go. Well, that's a no anyway. Look at the chart. Okay? 113 jumps up to 120. Drops down to 113. Jumps up to 1950. Drops down to 113. Jumps up to 120. Look, now it's coming back down again. Okay? Hopefully that answers that question. So buy right before the EX dividend date. Brandy, I like to buy 2 weeks before the EX dividend date. Give the stock some time to move. William Lee, how are you doing today? JJ, dividends are taxed. Okay, JJ, if you're worrying about taxes, you got to talk to a tax professional. Not a tax professional, a tax strategist or a tax planner. You don't want to go see a bookkeeper. You don't want to see an accountant. You want to go to a tax strategist. Okay? Now, it's very important when you're setting up your account. Number one, never set up an account in your own name. Okay? Put in a company name. Put in an LLC. Put it into a trust. It is away from litigation and it's taxed differently. You need to talk to a tax strategist if you're serious about that kind of investing. All right, more questions. What's your thoughts on Starbucks CEO change? Texas Instruments, we all looked at Texas Instruments. I very much dislike when an app tells you you will be able to do something and then you're not able to do that. Ooh, Jason, I hate that too. Joe, so did you like what Gallant said? FDX. Oh, we just looked at FDX. Okay, now FDX, the numbers just didn't look right. Not this week. No, FDX is on my list, and I do usually buy them when the numbers look right and the chart is correct. Jim Bob, what's your top recommendations for dividends? Okay, Jim Bob, I told you before, I don't make recommendations. I don't make recommendations. Is this pre-recorded? That's an interesting question. Is this pre-recorded? Let me think. Yeah, it is. I'm answering questions and he's asking me if it's pre-recorded. Corey, what's your thoughts on Starbucks CEO change? Well, let's take a look at Starbucks. So we said that a little while ago. Oh, I thought you said ARP. Wait a minute. Did I say it's FedEx? Hold on. FDX. Oh, yeah, we were talking about it. Hold on a second. 15. FDX 292, 283, 285. Yeah, all right. Sorry, Joe Sullivan. Yeah, it is like a perfect setup. 30 days ago was a 30-day high. Okay, 30-day bottom was last Friday. Monday was up, Tuesday was up. Look at the numbers. 283, 292. If I do in the 285s for this week, it's a no. But for next week, it's a yes. Okay, so I said yes, but not for this week, but for next week. Okay, so let's take a gander at Ford because we were going to look at Ford. Mima, this is for you. You ready? You want to take a look at Ford? Well, a year ago, Ford was at 1214, topped out at 14. Was that 1492? 1463. That's the high. And that was back on the 16th a couple of weeks ago. All right, last 30 days. Here you go, Mima. You ready? Last 30 days with Ford. 30 days ago, we were at 1450. Then she hit 1460 or whatever it was, the high. Okay, 30 days ago. Our bottom was last Monday. She got 1, 2, 3, 4, 5, 6 days to the upside. Right now it's at 1014. Now, if I wanted to do it first thing in the morning, the 1050s are going for 2 cents. No. Next week's 1050s are going for 7 cents. No. Okay. This week's 10s are going for 21. I'm losing 14. 14 from 21 can be 5 cents. No. Okay. Next week's 10s, right? Next week's 10s are going for 28. Now I'm losing 14 cents right off the top because remember I'm buying it for 10.14 if I buy it tomorrow morning. I sell someone the rights to buy it for me at 10 cents or $10. Next Friday, by next Friday, I will collect 28 cents. Now you take the 14 cents off the 28, that leaves you with 14 cents. That's 1.4%. Okay, 1.4% for next week. If you like Ford. Now let's take a look at Starbucks, because Starbuckies, SBUX. Whoops, there we go. Starbucks, yowza. Well, I want to go a little deeper with this one, because this is going to be kind of fun. Now, this is what we call a bunch of BS, because what has a start? Starbucks is a no. Well, actually, it is a no, but I already own Starbucks. But let's take a look at the numbers and let's talk about it. All right, next. I'll shoot another video. Why not? No, I don't want that. No, I don't want that crap either. No, I don't want that. What the hell did I do? I did something wrong. Alright. Right, there we go. Alright, so we'll look at Starbucks. Starbucks, big jump today. But before that, alright, Brandy, we already looked at Texas Instruments. Okay? TXN, already looked at it. Alright, Starbucks. High, low, where was it? Where is it? Where's the direction? This is craziness right here. But we're going to take a good look at that, and you're going to see some crazy stuff. Alright? I very much dislike it when, okay, yeah, we already did that. What's your top recommend? I don't make recommendations. I recommend you do some research. General Electric. Ooh, I like General Electric. Let's write General Electric down. Favorite monthly dividend stock. Well, that's an easy one. That's Macy's. Uh-oh. What did you just ask me to take a look at? JWN. Ooh, nice one. JWN. GE and JWN. GE, JWN. All right. Oh, that is horrible. Oh. Why don't you take a loss every time? Don't you take a loss every time you buy an option back? No, Picaris, I don't. Because remember, if I sell an option on a Monday for 20 cents and Friday it's 2 or 3 cents, well, yeah, I'll buy it back, but I don't take a loss when I buy it back. I only take a loss if I sell it for 10 cents and on Friday it's worth 50 cents and the 50 cents is going to interrupt profit from somewhere else. It's all about the numbers. Okay, Picaris, you've been here long enough, you know it's always about the numbers. All right. Jim Bob. Macy's warnings coming up. Well, you wanted to take a look at it, but we're taking a look at Starbucks first. Okay, hold up. All right, a year ago, Starbucks was at 179. It topped off at 107.58, and that was the end of November. We got a double bottom, beginning of May, and the middle of July at 71.74. Much better. You know, true hot toddy. Someone mentioned something about a hot toddy. You know, a true hot toddy is coffee, bourbon, honey, lemon. Sorry, I'm a Kentucky boy. Yeah, that's exactly what it is. Bourbon, honey, lemon. Ugh. And I don't like it. Oh. Anyway. Someone had to tell me I know what a hot toddy is. Alright. So Joe Sullivan says Starbucks is a no. So let's take a look at the last 30 days. 30 days ago, we opened up at 74.89. One day later, on the 16th, the 16th of July is the 30-day bottom. Up, down, up, down, up. And then she's shot up. Well, I want to take a look at that shot up, and I want to tell you guys something, and you guys might find this rather entertaining. You're going to find this extremely disturbing because, here we go, you ready? The bid, 95.81. The ask, 95.90. That is a 9 cent difference. The margin between the bid and the ask, the spread is 9 cents a share. Ooh, wait till you see this. Now, waiting for this to open up. Here we go. Going over here. The average daily volume for Starbucks. Okay, the average daily volume, TGT might be my best find yet. Oh, sorry, Joe, I'm going to say no to that one, but we'll take a look at it. Hold on. Let me finish explaining to you Starbucks. Now, they announced that there's going to be a new CEO. Great, fine, dandy. Take a look at the numbers. Are you ready? Down here, these little blue lines, okay, that's volume, right? It's how much volume. So the average volume for the past week or so is 11.5 million shares. Clear. 11.5 million shares. Okay? Now, the market maker between the bid and the ask is making 9 cents a share. Now, 9 cents a share is not a lot. So let's multiply this by 0.09. So how much money does the market maker for Starbucks make on average? $1 million a day. Okay, that's on average. The bid and the ask, the market maker makes money every time a share is traded. So if you buy or you sell, do you think the market maker really cares? No, he doesn't. All he cares about is how many shares are being traded. So the average trading volume for Starbucks is 11.5 million. That's the average. What happened today? Well, today, think about this clearly, okay? Get your head out of the clouds for a second and stop thinking of the profit. Think about what happened today with Starbucks. They go up and they say, hey, we got a new CEO. Did the CEO actually do anything today? Did anything actually happen inside the company today? Did everybody just say, oh, we got a new CEO. Let's put some more hours in for free so we can make the new CEO feel comfortable? Probably not. But here's the thing. Today, there was 157 million shares that traded. So think about this for a second. Let's clear that. 157 million shares. Multiply by the 9 cents per share that the market maker makes. So the market maker, instead of making $1 million a day, today he made $14 million a day. And what did the market maker do to earn that $14 million? He took the news, hey, we got a new CEO. What are you going to do about it? Well, you know what I'm going to do? I'm going to take the $77.50 strike price, what it should be at. I'm going to jack it up to 90. So is that actually anything of value there other than hype and BS? No, you got a new CEO. Why did it go from here to there? Okay, and 157 million shares traded. Are those people buying or are those people selling? We don't know if those were buyers or those were sellers. Don't know. What we do know is the market maker, the only person who knows or is in control of this mess. Okay? He's the only one. He can decide to go up higher. He can decide to go down lower. His only job is to make sure people buy and make sure people sell. That's his only job. And he got $14 million today. He usually gets $1 million a day. But not today. Today he got $14 million. Only because instead of taking that news and saying, hey, you know, we're trotting along very nicely, moving up slowly. We're at $77.50. Okay, great. Market maker, we get a new CEO. Great, let's see what happens. Let's see what he does. No, he doesn't do that at all. He says, you know what? I'm going to jack the price up and see how many shares I can sell. If you think about it, that's some serious manipulation. Because what did the stock, what did the market, what did the CEO actually do today? What did he do? Clear off the desk, say, get your crap out of here, I'm bringing my crap in. Oh, I want you to repaint the walls, and I want you to do this, I want you to do that. What did he do today to justify a jump from 77 to 90? He probably did absolutely nothing other than spend companies' money. Say, all right, I need new stationery, I need new business cards, I need my all social media all changed, I need my my I's dotted, my T's crossed, so I can settle into my new job. My new job, great. But does that constitute a $20-some-odd increase in price? Not at all. Anyway, that's enough of me blowing smoke. I hate it when the market maker does that. I prefer he just, open up the store, business as usual. We closed at 77.50 yesterday. Great, let's open it up at 77.50, whatever. Yeah. TGT might be my best find yet. Well, Joe, let's take a look at TGT. Now, you do know TGT is highly susceptible to black swans. Okay? There's one, there's two, there's three, and there's another one over here. Okay, that's 3 in a year. You know how I know? I got stuck with 2 of them. I lost, I think it was $14,000 or $15,000 on this one right here. Okay, I had it at 110. Okay, and then she jumped up to 130. Okay, it jumped $16 overnight, and that black swan lost me about $14,000 to $15,000 because I originally bought it at 135, and I watched it fall all the way down to 102, and I was still selling covered calls down here. And when it jumped up here, I had no choice in the matter but dish out. I think it was 12 or 15,000 before it hit the 135, and I finally exit. Barely. I don't even think I broke even on that one. Anyway, so TGT, you think so? Well, let's take a gander. A year ago, we're sitting at 129, bottomed out at 102. I didn't even have to look. I know it bottomed out at 102 because I had it at 102. And it topped out at 181. All right, last 30 days. Last 30 days. 30 days ago, we were at 153. Topped out at 156.74, and that was back in the middle of July. From there, drops a little bit of retrace, drops back down. Here's your 30-day bottom right here last Monday. Another one last Monday, 30-day bottom. 1, 2, 3, 4, 5, 6 days to the upside. So you got 136.66. Great. What do the numbers look like? Well, 136 is when we look at the 137s. Ooh, check it out. You could do this week's 137s and get 188. That's a nice trade. It is. So you might be right. Now you got to be careful with Target. Target is susceptible to black swans. Okay? She could drop big or she can jump up big. Okay? Now, I was on the right side of the black swan last year, and then I was on the wrong side of the black swan last year. Okay? That being said, historically speaking, what does Target normally do this time of year? Well, normally, here we are. It looks, okay, take a look at the chart. It looks as if you could take a little bit of a dip this week and go back up and then slowly go to the upside in the next few weeks. If you like Target. Let's go back to where we were. All right, got some more questions here. My bad. All right, John, is this pre-recorded? Yeah, I think it's the second time I've acknowledged it. No, it's not pre-recorded. Now look at ET. Energy Transfer. Okay, they don't quite have 20 years of increased dividends, but some people like it, so let's take a gander at it. Oh, that's horrible. Seems like most dividend companies are monthly options. Okay, Rich Bruner, I'm going to disagree with you. Okay, there's 9,598 companies. I look at 300 that are weekly options and have 20 years or more of increased dividends. Now, if I close that gap a little bit, if I say, all right, I'll look at 10 years of increased dividends, well, then I'll be looking at 400 or 500 different companies. I don't really have the time for that. Okay? Uh-oh. Oh, what happened? I'm trying to shoot videos for Rumble. Record. There we go. All right. Next on the list, Energy Transfer. All right, we already did Energy Transfer. Currently at 15.64. The 15.50 is going for 15 cents. You're not quite making your 1% this week. But for next week, the 15.50s are going for 23. You take 14 cents. Yeah, it's going to be a no. Sorry. Now, don't get me wrong. I'm not a huge fan of Energy Transfer because sometimes the numbers just don't work out and they don't pay enough dividends to make me satisfied. But some of you guys in the audience like Energy Transfer. And at the 15.50, it's not quite 1% for next week. Not quite 1% for this week. Okay. Now take a look at the chart. The last 30 days. 30 days. Yeah. Okay, you can plainly see that she is in a downtrend. Here's your 30-day bottom here. Okay, big jump up here, coming back down. So Energy Transfer does not look that promising at the moment. However, I would say in another week or so. So let's put Energy Transfer down for next week. For those of you guys who want to tune in next week, we'll take a look at Energy Transfer again, because once she comes down and finds her bottom, more than likely she'll turn around and go back up, and maybe the numbers will be a little bit better. Paccara, sometimes he goes in the money to be safer. Okay, thanks 86. I don't think I compliment you guys enough, the moderators. I think there's 3 of them. You guys do a great job answering some of the questions, and I can't get to all the questions. I might do my best, but I got Rumble over here, Facebook here, Instagram here, TikTok here, YouTube here, and then I'm recording videos for my other channel. I do have another channel called The 10-Minute Trader. That's going to be a little bit different trading strategy. I got a bunch of them. I only teach one per channel because I don't want people to get confused. Because this is the safest trading strategy there is. You buy the stock, sell some of the rights to buy it from you for the exact same price you paid for it, and you get a 1% per week. Comes to over 50% per year. Dell, Andrew told us to take a look at Dell. Judy, I think you do a great job. Thank you there, Miss Judy. I'm going to take that as a compliment. All right, so Dell Computer. Ooh, Andrea, you're really active tonight. Way to go, Dell. Now I do have some Dell. Where's my Dell? Here's my Dell right here. Whoops, let's get rid of this. My Dell. Alright, I'm into Dell, the 109.93. And I sold the 96s. Wow, for 119. Uh-oh. That don't look good. Alright, so let's go back and see what Dell actually looks like. Okay, now Dell's a very interesting one. Because look, a year ago, she's down $50. $50 a year ago. Look at the high, 180. I don't even have to look at it because I've been looking at it so often. It's like 180. Okay, the high is what's from 50 to 180. Let me ask you a question. If you owned it in the 50s or 60s, or even 70s or 80s or 90s, and it jumped up to 180, would you be selling? I would. Because there's an old saying, it ain't a profit until you take it. Jojo, you want to take a look at DFS, huh? I'll write that down. DFS. That sounds familiar. I'm not 100% sure what it is. All right. Let's take it. Oh, that's horrible. Why am I still drinking? Because it's supposed to be healthy for you. It's supposed to help you get rid of this cough. That's the only reason I'm getting rid of it. Discover. That's why it sounded familiar. All right. So a year ago it was at $50. 54. Jumps up to 180. Now, where are we now? Last 30 days. Here we go. Last 30 days. Check it out. 30 days ago, we're at the high, 141. Great. She drops. Here's your 30-day bottom, which was last Wednesday. Thursday, Friday, Monday, Tuesday. 4 days to the upside. Nice. I like it. Now, currently sitting at 99.94. What the heck did I sell? So the 100s. Cool. Look what the price is right now. $100.90. Well, look at the 101s. Going for $155. Well, I tell you what. I'm going to load up on those. I got 2 accounts. I got like $30,000 each. I'm going to buy a bunch of those tomorrow. Just saying. Because you got 4 days to the upside. You get 30-day bottom here, 30-day top there. 140. She goes from 140 down to 90 or 87, 88, somewhere in that area. Now it's at 99. That's still a long way to go to the top. I had no problem whatsoever jumping into Dell. Okay, Dell is one of those companies that I've watched grow from nothing to something. All right, it's too high. I'm sorry, Andrea. I'm going to be jumping into Dell tomorrow. Yep. They stole CMG CEO. Yeah, well, you know what? It is what it is. You know, you get a job offer that's a hell of a lot better than the one you're at, you might just take it. That's probably what he did. Now, I did have some, what was it? CMG. I had some of that a couple of weeks ago. We saw. Now, I usually don't do Chipotle because I don't like companies that don't pay dividends. But the funny thing is, it was such a strong buy, and we got such a crazy premium. We jumped on it. Got 4% one week, 2% the next week, and I jumped out. All right. Please, Lord and Savior, E.T. I beg. Okay, John, we looked at E.T. Okay, Energy Transfer. Okay? Now, I said Energy Transfer not for this week, because look at where she is. She's coming to the downside. Here's the 30-day bottom here, but she's coming down. Even at 1560, the 1550s are going for 15 cents, not your 1%. 1560s, the 1550s for next week, once you take the 14 cents off of it, again, not going to work. You're not getting. Now, I'm okay with Energy Transfer. It's not high on my list, but you're not getting your 1%, either one, and it's in a downturn. Okay? 86, up 25% off. A CEO change is crazy. Yeah, you're right. Have you always been so disciplined? No, absolutely not. Okay, see, the funny thing is, that was a good question, by the way. You get to a certain point in life, all right? You get to a certain point in life and you realize, because I'm retired now. I'm trying the retirement out. I'm getting a little frustrated because I want to do something, but I don't want to punch a time clock. Anyway. All right, so here's the thing. I've been trading for 20 years. The first 4 or 5 years, I made a lot of stupid mistakes. I did the School of Hard Knocks. I made more in one day than most people make in a month. I lost more in 1 week than most people make in a year. I learned my lessons the hard way. I paid thousands upon thousands of dollars for training. You know, all these different option strategies. There's so many option strategies. It's crazy. Yikes, yeah. So you guys, you're lucky enough that you have someone that made a bunch of mistakes. So now I stick to a couple of simple trading strategies that are effective. Okay, this one was created for my 9-year-old. It had to be simple, safe, predictable, consistent, and no way to lose. Now, the reason why I say that is because when you ever invest, there are possibilities to lose. Now, if you buy a company that goes bankrupt, there's really nothing you can do about that. But if you're consistently looking at companies that always increase their dividends for more than 20 consecutive years, that means they're consistently profitable. That means they've been in business for 30, 40, 50, 60, 70, even 100 years. Hold on. Consolidated Edison. I think that's one of the oldest companies on the stock market. They're over 200 years old, and they still pay dividends. So if you pick a good company, you're less chance of losing. And for real, they're going to start skipping out on the coffee in the cup. Yeah. Okay. Chipotle. Nope, I don't do Chipotle. Yep. Okay, great job. 90 minutes. Blah, blah, blah. Andrea, CMG will be fine. I'm sure they will. Going down tomorrow. More than likely. What do you think about SCMI? Oh my goodness, Jerome, you're new here. Does anybody want to fill in Jerome about SMCI? Unless you really want me to go into it. He's a new guy, and I really hate to scare him away by giving my thoughts on SMCI. Why is the S&P 500 so much more valued than the Russell 2000? Do you think that it could be undervalued? Jimbo, that's an interesting question. But here's the thing. I honestly don't care about it. Isn't that weird? I honestly don't care. Because you're going to find, Jim, that there are so many things you can invest in. For instance, there's 9,598 stocks. That's not including futures. That's not including Forex. That's not including cryptocurrency. That's not including NTFs. There's so much crap so many places you can put your money. I'm just looking at a tiny, tiny sliver of a niche. Those are dividends, specifically dividend companies that have increased for more than 20 years. That niche is so small. It's like, why would I bother? Well, the reason I bother because it's simple, safe, predictable, and consistent. I get 1% a week, and that's perfectly fine by me. If I did want to sit in front of the computer, I did this years ago. Sit in front of the computer, you look for setups. Oh, I need a double shoulder. I need the head and tails. I need the flag going this way. I need a penny going that way. Yeah. A lot of ways of doing it. No. You're going to get to a point, and everyone, you can deny it as much as you want. Everyone, you are going to get to a point in life where you are forced to retire. Only 3 ways to retire. That's it. Only 3. You age out, which means you get so old, they say, all right, you're done. Don't come back to work anymore. You know, they legally can't do that, but they say, yeah, right, you're like you're in your 80s or 90s. Stay home. You know? Or 2, you walk out. That's what I like. Walking out means you have enough money in your assets coming in. You know, you're getting enough money return for your investments that you don't need to work anymore. Okay, you walk out. Or 3, this one's yucky. You get toe tagged. Trust me, you do not want to get toe tagged. Okay, that means you die on the job. And I know a lot of people that have to. I bumped into this guy. They age you out starting at 40, probably. Okay, I bumped into this guy a couple of months ago. Okay, I was going to check on my boat, and I was fueling up my van. This guy, really sharp dressed, you know, he was all in a suit, tie, he looked really, really sharp. And I seen he worked at one of those resorts because he had his, you know, the name tag that said his name. And I talked to him, say, how you doing? You know, 84 years old, blah blah blah. We got to talking. I said, let me ask you a question, if you don't mind. Are you working because you want to get out of the house, or do you working because you have to? He looked down, shook his head. He says, I have to work. I got to pay bills. 84 years old, and the man is still working. Yeah, I do not want to be there. Okay, you are going to get there at some point in time, which means the money you invest for your future retirement, it's coming. You want to fight it, and you want to say no. Okay, I'm 60 years old. I'm not 100% sure I'm done playing soccer yet. I broke my collarbone earlier this year. I broke an elbow. I get hurt every time I play. I play rough. I do. I admit it. But I'm getting a little too old for that, because it takes weeks and weeks to recuperate. But anyway, as I'm saying, you are going to get older. The money has got to come from somewhere to pay your bills. Okay, as humans, we are the only species on this planet that has to pay to live here. I've said enough. Let's get going. Take a look at some more stocks. Jerome, this is the second time you asked me. Does somebody want to tell him about SMCI, or are you going to leave it up to me? I don't want the guy to feel bad when I start picking on him, because that is a turd and a half, in my honest opinion. Use honey. Jack, you know, there is, see this one? Cold, water, honey, lemon. This one is warm, honey, lemon, and bourbon. Ugh, I hate bourbon, but it's supposed to be good for the cough. Oh, I hate that. All right. Yeah, I got that, Jack. Yes. Uh-oh, I missed some questions. Chipotle. What time is it? Oh, it's only not even 11 o'clock yet. What do you think is good for the energy sector? All right, Curtis, you are under the impression that I actually isolate my stocks by sectors. Okay, terribly sorry to disappoint you. Let's move this over a little bit. Because I said I was going to talk about this later on. Now it's time to talk about it. Let's go right here. Yeah, nice. All right. What you see behind me, this is a calendar. I know, we all know it's a calendar. But each one of these green dots represents a company that is paying a dividend on these specific dates. Okay, let me go to one that you probably appreciate more than this one. And this is my personal list, or one of my personal lists. All right, this one you might like better, this list here. This list is Warren Buffett's stocks. So, Ally Bank, Aon, DHI, Siri, Visa, Wells Fargo, Moody's, Heinrich & Payne, Kroger, Capital One Finance, Apple, blah, 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 blah. Okay, each one of these dots is the EX date. There's 4 dates to remember. One is the announcement date, self-explanatory. The company tells you all about the dividend that's coming up. 2 is the EX date. That is the little green dots. The EX date is the last day the stock trades before the dividend is paid out. That's date number 2. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, self-explanatory, payment date, when you get your money. So why is it I look at the dividend dates? Well, here's the reason. Johnson & Johnson on the 27th. Each and every one of these companies has a tendency to increase in value before the EX date. Now, I like to buy 2 weeks before the EX date on a Monday. Why? Well, because if Johnson & Johnson here on the 27th, 2 weeks before, on a Monday, would be the 12th. Okay? I will look at it. If the numbers work, great. If the chart is working, great. I like to buy it at the money, at the market open, first thing in the morning, 9:30. So by 9:31, I will have bought Johnson & Johnson, and I will also have sold the covered call against Johnson & Johnson. So what am I looking for? Okay, Monday, I want to, by Friday, be out of Johnson & Johnson. So if I buy Johnson & Johnson on Monday at $100, and Friday afternoon at 4 o'clock, it's at $100.22. Well, fine. I'll be back into cash the following Monday. I will collect the 1% here, or whatever the percentage is. If the stock ends up at the end of business on Friday, 4 p.m., higher than the strike price I sold, I will sell, and I will be back into cash on Monday, and I'll be looking for another company. Okay? Well, what's next after Johnson & Johnson? Well, there's KHC, which is Kraft Heinz. There's T-Mobile. What comes next? Occidental Petroleum, Hewlett Packard, Boyd Gaming, Coca-Cola, Paramount, Mondelez, US Bank. Okay? Now, the reason why I do that, let's go back one. Now, let's say hypothetically, I buy it on Monday at $100, and on Friday it's $99.99. Well, at that point, I will buy back my option and I'll sell it and I'll lose 1 penny. Not really losing a penny because the premium is over 1%, and that's what I'm looking for. I'm looking to capture the premium because the premium is usually always higher than the dividend. What is the dividend? 124. Let's take a look. J&J. Oh, currently, Johnson & Johnson's at 158. The 157 is, check it out, 182. So here's the question. If I can do a covered call every single week and get 182, why the hell would I buy it to get the dividend at 124? Because the premium is usually higher than the dividend. Okay, so let's continue looking at this. So what happens? Okay, I buy it, it doesn't hit my target. Okay, well I made my 1%, the premium. Okay, Monday comes and I sell the exact same one all over again, the $100. Let's say here, $99.99, it doesn't hit my target again. Well, great, I'll do it again here. Okay, so premium, 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 dividend. So 187, 187, 187, 124. Kind of. You kind of get the drift. Not exactly, but you know, it is. So why would I cut the dividend if the premiums are higher? Buy it 2 weeks before the EX date, on a Monday, buy it at the market, open, sell at the market, covered call, and then you get your 1% or more if everything works. It's not that difficult. Safe, predictable, consistent 1% per week. Always, always, always make sure it's a good, decent company. Okay, you heard of Johnson & Johnson, Heinz Ketchup, T-Mobile, Louisiana Pacific, Chevron, UPS, Capital One Finance, Apple, Kroger, Hewlett Packard. These are companies you've heard of. Now, some of the companies you guys come up with, I mean, some of them are doozies. Like, what the hell are you thinking buying that piece of crap? So, Curtis, yeah, I don't divvy them up. Jerome is still asking for SMCI. Now, Jerome, believe it or not, that's I think the third or fourth time I've seen you ask about SMCI. And apparently, none of my moderators want to inform you about how I feel about SMCI. So, let's take a look at this big fat turd. SMCI. Number one. It has weekly options. Well, imagine that. Okay, so it has weekly options. Big deal. Let's go over to Yahoo Finance and put SMCI in here. SMCI. Oh, look at that. No dividends in this time sector. No. No dividends, that's a no. But it gets worse. It doesn't even give you a yield. Yeah, SMCI has no dividends. So, yeah, it's a no. Yeah, I'm trying to tell the guy. There's no dividends, so it's going to be no. I can't really pick out, and it's $500. I like to stay below 250. I'm 20, new to investing, been buying pretty sporadically. I want to retire early, want to be strategic. Well, Jim Bob, you're 20? Awesome. You want to trade, dude? You could be 60, I'll be 20. I got no problem. You can have everything I have, and I will take everything you got. You could be 60, and I will be 20. I have no problem with that whatsoever. All right, let's go take a look. Can you give me your setup for Dell tomorrow? Jack, I'm not 100% sure what you mean by that. But let me just show you Dell again. Now, I like Dell. We already went over Dell. D-E-L-L. Okay, here's the high of the year, 179. Okay, so here's the high of the year, 179. All right. She drops all the way down to here last Wednesday. So last Wednesday was the 30-day bottom. 1, 2, 3, 4 days to the upside. Okay, great. It's at $99.94. That's the last traded price. See? So if I'm going to buy it at 100, see the price right here, $100.90. So if I buy it $100.90 and I sell the 101s, the 101s are giving me $1.50, $1.55. All right, so let's take a look at what the actual trade is going to look like. You ready? I hope you're taking notes on this one, Jack. You ready? Now, I don't know if you have Thinkorswim or not. I like Thinkorswim. It's simple. It's easy. It's right to the point. Get rid of all this crap. Now, I already told you that I like the 150, the 100s, the 101s. So first thing I'm going to do is I'm going to change this, where it says single, and I'm going to change it to it says covered stock. Alright, now I told you I like the 101s. The 101s is right here. I'm going to click on that, and the order pops up. Okay, so now I like to buy 1,000 shares at a time. So 1,000 shares, and here's the order right here. I'm going to buy 1,000 shares of Dell at the market, at the limit order. Then I am going to sell 10 contracts, Dell, 16 August 24, is that right? Yep. At 101 call strike, and that is going to be the order. Okay, here's the order right here. Okay, buy 10 covered Dell 100s, those are the weeklies, 16 August 24. That's this coming Friday. Okay, this option expires this coming Friday. Dell at 98 limit order to open to open. It says to open twice. Why? Well, because I'm opening a stock order. I'm buying the stock. I'm also opening an option order. So I'm opening 2 orders. Alright. Now, the next line down. Break even price. Do you see that price right there? $98.80. That's my break even. So if it is at $100.90, that's what I'm buying it for. My break even is $98.80. So if the stock goes up, I make my money. Stock stays the exact same, doesn't move at all, I still make my money. The stock can even come down a little bit. My break even is $98.80. Anything over $98.80 is profit. Big profit, small profit, profit is profit, and nobody ever went broke taking profits. Alright, next line. Maximum profit. $2,200. Okay, that's my maximum profit. Remember I like safe, consistent, and predictable. Well, if I know what my profit's going to be before I even do it, well, that's predictable and consistent. If I get 1% per week, that's consistent. Alright. Maximum loss, $98,000. Well, that's what I'm paying for the trade. And if Dell, let's say the earthquake, the earth opened up and swallowed the corporation for Dell, and Dell disappeared overnight. That's your risk. Dell's been around for quite a while, but the risk is the corporation could go bankrupt overnight. That's the risk. I don't think so, but it can happen with any company. So, I'm going to bust out my calculator. Maximum profit is $2,200. And how much is it costing me? $98,806. Whatever rate of return is that? That is 2.22%. Now, those numbers might scare you a little bit, so let's change something here. Let's get out of that. And rather than 1,000 shares, let's just buy 200. Oops. 200. Okay, so here's the trade. Okay, here's the trade right here. 200 shares. Look at this. The break even, exact same. Maximum profit, 440. Maximum loss, 19,000. Okay, but it almost guarantees the exact same rate of return. All right, so I take my calculator, clear that. $440 is my profit. I divide it by what I have invested into it. For 200 shares, it's 19,760. And that comes to, oh, look at that, 2.2%. The percentages are always the same. Now, the reason why I like working with percentages rather than numbers, because we're not all starting off at the same level. Okay, I have X amount of dollars. And then some of my students have a shitload more money than I do. But here's the thing. If I say, hey, I made $50,000 this week, well, wonderful. Is it? Not really. If I made 50 grand this week, well, what did I start out with? Did I start out with 100 grand and I made a 50% profit? Or did I have 3 billion and I made 0.001%? So it's a huge difference. That's why I like looking at percentages. 1% is 1%. So if you have a $500 account, your 1% is going to be $5. If you have a $50,000 account, your 1% is going to be $500. If you have 100,000, your 1% is going to be 1,000. It's all the same. It's just 1%. Okay, that's why I like using percentages as opposed to numbers. Because if I say, hey, I'm making 20, $10,000, $15,000 a week, you're saying, well, I only have 20,000. I'm only making 200 a week. You're gonna feel kind of bad. So I don't use numbers. I rather use percentages. It makes people feel better. All right, Gallant, you like DFS? DFS, Discover. So let's get out of here. Get out of there. Get out of here. Get out of there. And then we're going to put DFS right here. DFS. All right. High, low. Where was it? Where is it? What direction is it going? Blah, blah, blah. All that kind of nice, neat, fun stuff. At 127.38. The 127s are going for 5 cents. I'm going to say no. Let's look at next week. Next week's 127, 220. That's more like it. All right. So for this week, no. Next week, yes. All right. So here we go. A year ago, 102 bottomed out at the end of October at, is that right? $80.21. Okay, that was the end of October. Here's the top right here at 147 on the 18th. Okay, so 30 days ago we opened up at 133.98, 134. Okay, shoots on up to the 148, drops down. 30-day bottom was on Monday, last Monday. Look at that, slowly to the upside. Great, if you like DFS. So I'm going to write for tomorrow, Dell and DFS. I might not do DFS tomorrow because I prefer to jump in, jump out this week. Next era, NX. Okay. Gallant and the premium for TGT next week are crazy. Gallant, we already looked at that. Yeah. I'm a little bit shy on TGT. They're highly susceptible to black swans. Okay, I got burned once, that black swan. Hey, look at this. LA Soundwave. Hollywood. Nice to see you there, dude. Alright, Bamarock. Gallant. Earnings for Target are on the 21st. Last time I seen that was Walgreens jumped in and I got mauled. Bamarock, sorry about that, dude. Alright, Charlo, BFT. You really want me to go look at BFT, a company I've never heard of? What the heck is BFT? BFT. Foley Trasmine acquisition. Yeah, what the heck is that? Yeah, no options. Sorry, that's a no. Okay, Charlo. Okay, seriously, you got to give me something that I can work with. Got it, Jack. Way to go. All right, Marathon Mom. Hey, nice to see you again. When do you plan to buy Dell? I plan on buying some Dell tomorrow morning. Tricky week with CPI. Yeah, I don't pay attention to the CPI. Sorry. Okay, consumer price index got nothing to do with the stock prices, in my humble opinion. Jim Bob was just looking for some tips for someone basically completely new to trading. Okay, Jim Bob, my honest opinion, you're new. Okay. Best advice I can give you, keep coming back, keep learning, keep searching for someone to teach you, to mentor you on something that you can do yourself, simply, safely, predictably, consistently. And, you want to protect whatever your investments are, whatever you put aside, you want them to be safe, predictable, consistent. Okay, I'm just showing you a way how to get 1% per week. This is kind of boring. You're 20 years old. Okay, this is cash flow. This is not accumulation. Okay, you're at that price. You're at that place in your life where you can take risks. People like me, people older than me, we can't take as many risks as you can. Because granted, I plan on living to at least 90s, 100s, maybe. Okay, but I can't rely on that. Right? I've seen too many of my classmates pass away. Right? So you're 20, you got a long way to go. Bamarock, Jim Bob, he is here every night. Don't be in a hurry. Thank you for that, Bamarock. Just take a few weeks to learn. Yeah, also, the stock market has been around for 400 years. 400 years. 1602, the first dividend stock was sold. Okay? It ain't going anywhere. Patience. When I first jumped in, I always got frustrated because I missed a trade. Missed a trade. Damn. Patience. Very clear. Thank you. Got that, Jack? Code Blue Clips. Interesting name. I'm sure there's a story behind it. What do you do when there's a macro event that forces you to hold stock? Well, you're new here, Code Blue. Now, I have certain rules. Rule number 1, never buy a stock you do not understand, you do not want to hold on to, or, go into it as if you're going to buy it and hold it forever. What do you do when you buy a stock? Well, stocks are going to go up. Stocks are going to go down. Stocks are going to go up. Stocks are going to go down. You're going to look at it and you say, damn, I'm losing all this money. And you're going to look at it and say, oh, great, I made all this money. Yeah. Enjoy the emotions. You're going to have them. Because that's all stocks do. They go up, they go down. Take a look at this. Up, down, 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 up, down. Oh, wait a minute, look, you took a break, came over to wash my clothes. No, they don't do that shit. They go up, they go down. That's all they do. Okay? Make a plan. Buy a good, decent, quality company that you're okay with owning for a long term. Okay, those are the ones you want in your roster. Ones that you are okay with buying and holding on to. Okay, the stocks that I have on my list, let's take a look at some of them. Okay, Apple, Capital One Finance, Kroger, Heineken Payne, Moody's, Wells Fargo, Siri, Visa, Louisiana Pacific Railroad, Jeffries, Chevron, UPS, Johnson & Johnson, Heinz Ketchup, T-Mobile. You've heard of every single one of these companies. Some of this crap you guys give me to take a look at, I've never heard of before. It's like, what are you thinking? You know what I mean? This is your money you're talking about. We're talking about your money. You've worked for this money. Okay? It is going to have to, your money is going to have to pay your way when you get older. Because when you get older and you can't work anymore, the money has to come from somewhere. Okay, we're the only species on the planet that's got to pay to live here. Alright, no name user. If you do a covered call options, can you sell your shares if you hit break-even price? Okay, no name, I'm not 100% sure what you mean by that. But let me chime in for a bit. If I buy a stock, it is mine, I can do with it as I please. But if I sell an option against that stock, I no longer can do anything with that stock as long as that option is active. Okay, I have to wait for it to expire or for whoever bought it to exercise it. Those are the only two options you have once you sell it. Because an option is a legal binding contract, a call option or a put option. Now, call options give you opportunities where put options create obligations. Huge difference. I don't do put options. I don't like the feel of them. You're forcing somebody to do something. Every once in a while I'll do it in a different account, but here it's always the same strategy over and over and over again. Now, don't get me wrong, I understand that this is a stepping stone type strategy. You're going to get into it, you're going to learn it, you're going to find it, you're going to make money, great, and then you'll probably move on. I've seen a lot of people since January. They come, they learn a bunch of stuff, they make money, and then they move on. That's what it's for. Drazik, can you please analyze the above trade? SMCI is a no. DFS, we already looked at it. Okay? Drazik, we already looked at it. Yeah, I already looked at Target. I already looked at DFS. Drazik, I don't know which one you're talking about. Okay? I went through the questions. Hollywood wants to take a look at Southwest Airlines. Wait a minute. LUV? Is that Southwest Airlines or is that Las Vegas? I don't know. I forget. LUV. Southwest Airlines. Okay. First thing, as always, high, low, where was it? Where is it? Ooh, take a look at that direction right there. That looks nice. Okay, this is the last couple of weeks right here. Okay, that's what I want to take a look at. It's not me. Can you please show us how you go over the chart to see if it's a good buy? Well, it's not me. We're going to do that right now. Are you ready? Are you ready for this? clear, very clear. What do we got here? Jim Bob, every night, blah, blah, don't be in a hurry, covered call, blah, blah, blah. Okay, ooh, here we are, right here. How do you pick the stocks to do the covered call? Ooh, GK. Good question. How do I pick the stocks? I hope you have a pencil, piece of paper handy. Mascara, lipstick, crayons, chalk. Don't know. Poke a finger in your poke your finger with the needle right in the blood. I don't know. However, here you go. You ready? Go to Google, put into search, Dividend Kings List 2024. 54 companies that have increased their dividends for more than 5 decades. That's 50 years. The Dividend Champions and the Dividend Aristocrats, both 25 years of dividend increases. Okay? There's 150 Dividend Champions, and I believe there's 67 Dividend Aristocrats. Then you want to look up Dividend Contenders. Dividend Contenders is 300 companies that have increased their dividends for 10 to 24 years. Not quite the 25 yet. Okay? Then there is Warren Buffett's Stock List 2024. Now, those 5 lists right there will give you over 300 companies that have consistently increased their dividends every single year. Okay? Now, we're looking at Southwest Airlines. Okay? The current price, $25.67. So we're looking at the 26s. This week, no. Next week's 26s. Ooh. Nice. Next week's look good. All right. So this is why I want to look at the chart. Now, you guys want to see how? Well, one person want to take a look at the chart. First thing I want to see, any chart, any chart, and it takes you 2, maybe 3 seconds to see this. High, low was, is, direction. That's it. High, low, was, is, direction. That's it. Do not make it more complicated than it needs to be. Okay, you look at the chart, where's the high? Right there. Okay, where's the low? Right there. Where was it a year ago? Right there. Where is it now? Right here. Where's it going? Well, downturn, but lately she's going to the upside. I love it when she changes directions, and that's where we're going to take a close look. Now, I look at 4 different charts. The 1 year, the 90-day, the 30-day, and then seasonality. So let's take a look at the 1 year. A year ago today, 33.62. Bottomed out the end of October at 21.91. Topped out 35.24 towards the end of February. So 90 days. All right, 90 days would be right about here. Okay? 90 days ago. High, low, was, is, direction. Couple seconds. Okay? What else am I looking for? Are there any distinguishable patterns? Not really. And she drops, went up, sideways, drop, went up, drop, went up, drop. Yeah. No patterns that really stick out. Okay, great. Now let's look at the last 30 days. 30 days ago, here we go, go. Okay, 30 days ago, 27.24. Very next day is the 30-day high. Great, 30-day high, 30-day bottom, last Monday. 1, 2, 3, 4, 5, 6 days to the upside. I like that. I'm going to write that down for tomorrow. LUV. Okay. Next, I want to take a look at seasonality. What is seasonality? Well, that just gives me an idea how the stock normally moves throughout the year. Okay, the blue line represents this year. Okay, all the way to the left is January 1st, all the way to the right, December 31st. It's a whole year, 1 whole year. The red line up there is 10 years worth of data. That's the movement for the last 10 years on average. Okay, they take 10 years. 2014, 2015, 2016, 2017, blah, 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 all the way up to last year. That's the average movement. This is what I want to see right here. The next 2 weeks. Here we are right here. 8, 13, 14, 15, 16, 17, blah, blah, blah. Well, look at the red line. That's the average moving. Just sideways. Lovely. Papa Jeff. What's happening there, Papa Jeff? Okay. All right. Next on the list. Can you write up notes on how you pick them? All right, we already did that. Write down for cancer cure for loved ones, help. Okay, whatever, Charlo. TikTok. James, I'm going to ask Disaster Walgreens to come and wash my clothes. That's funny. If you're growing exponentially. So basic strategy is assuming that stocks shall always go up for a couple of weeks before the dividend pay. No, that's not what I said. You weren't paying attention. I said normally go up before the EX date. Okay. Manny, by reinvesting 1% into your 100%, how long does it take for you to double your money? Between 14 to 16 months. Yep, you're right. Code Blue, do you avoid the week of earnings? I don't even pay attention to earnings. Now, the reason why I don't pay attention to earnings, I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. There's no real predictability with earnings. Sometimes they're good, sometimes they're bad. Sometimes the stocks go up, sometimes the stocks go down. Okay? I like predictability, which is the dividend. They pay a dividend every 90 days. Now, there's some companies that are paying a dividend every 90 days for 40, 50, 60, 70 years. So those are the companies that I like. Southwest. Jumpy still be, okay, maybe not. Manny, 1% a week compound is 62% a year, so maybe 1 year, 5 months. Okay, Charlo. Have I did. I caught up with all the questions. Yeah. Okay, I got 5 minutes left. That's funny. All right, let's go to the list. PSEC. Somebody came out with PSEC yesterday. I can tell you PSEC is going to be a no. Usually always is a no. PSEC. No, monthly. That was quick. PSX. That's Phillips. Phillips. PSX. Phillips 66. 134. Okay, so the 135s. Ooh, 130. And 180. Cool. Okay, a year ago, blah, blah, blah. Last 30 days. Here we go. Yeah, okay, she stalled. Oh, boy. I missed these questions. AMD. Archer Daniels. Okay, Calibri. Well, nice to see you again. Let's see what you got to say. Give me a second. All right, Calibri did 700 Macy's at 1587, and have sell 7 Macy's at 16. 1550, exercise 56. Okay, well, that's more than 1%. Not quite sure what you're looking for. I mean, other than, you made more than 1%. That's the idea. You bought Macy's. Macy's has been around for 100 years, or over 100 years. All right, no name. In your experience, what percent of time you ended buying stocks? I still buy stocks now, so I'm not quite sure what you mean by that. Code Blue, I'm curious to why you don't pay attention to earnings. Oh boy, isn't premium normally higher those weeks due to volatility? Normally, yes, but it doesn't change the strategy. Okay, just because the company's having its what do you call it? Its earnings. Okay, am I making my 1%? or am I not making my 1%? Is the stock at a 30-day bottom going to the upside, or is it not? Okay, the fact that earnings are coming out, it's got nothing to do with where the stock is going. But what it does have to do is what the market maker decides to do. Because if you get positive earnings, the market maker may decide to move it up. If you get negative earnings, the market maker may decide to move it down. But here's the funny thing. Regardless of what the market maker does, it's you and me, that decide, well, it's too high, I want to take my profits. Oh, it's too low, I want to start buying. That's what we do. The market maker is the only person who decides where the stock opens up the next day. Oh boy. Gallant, are you still stuck with EL? Yes, I am. Yes, Estee Lauder, I believe it's down 10 or 15% from when I bought it. But I do sell, no, wait a minute. I don't make anything off of it. Consider my grandson's account. So he only got like 34 shares. He's waiting for it to go back up. So, when your dividend capturing is one thing, your dividends on steroids is another. Okay, and then your dividend investing 2.0 is another strategy. This strategy here, I think it's called dividend capturing 2.0. Okay, where we use the dividend to tell us when to buy the stocks, to sell the covered calls, to make the 1%. Yeah, so there's a difference between dividend capturing, dividend on steroids, and dividend 2.0. This is dividend 2.0. Dividend investing 2.0, sorry. Yeah, Gallant, I'm going to blame it on you. Every time I look at Estee Lauder, I'm going to blame it on you. All right, where was I? All right. Do you do it in a Roth? No, I don't. Calibri, thank you. You're welcome. James, can this method be used for monthly income? Well, James, I use this for weekly income. So the answer is going to be yes. Let me show you something quick because I don't think I went over it today. Right here. Now, these are my trades that I make on a weekly, for the whole year. Okay, see all these trades here? Okay, this is account number 1. This is account number 2. I actually go over and I tell you what my trades were. So let's pull up this one right here. Ooh, check out this one. You guys are going to love this one. I actually lost money this week. Intel, Kohl's, Win, Kohl's. Okay. I forget what I did, but it went down and I lost 0.15% this week. This is the only week that I lost money on. And this one was 0.6, 0.6, 0.6, 1.2, 0.7, 1.24, 2.6, 1.19, 1.2, 1.5, 1.2, so on. But what I wanted to show you, who was this for? James, you ready for this one? All the way up to the top. Okay, here we are, right here. Account number 1. I started off the year at 117,000. Okay, in July I deposited another 21. I combined 2 accounts together because I was getting a little frustrated doing 2 accounts. So current balance is 142. Now, I've withdrawn so far to date this year 28,000. If you take a look at each week, okay, this week here I withdrew 1,200. This week here I made 5.2% and I withdrew 1,200. This week here I made 3.3% and I withdrew 1,200. Okay, this week I made 1.5% and I withdrew 1,200. Okay, so all my withdrawals are there. Okay, this week here I withdrew 2,100, 1,700, 1,500, so on and so forth. So every week, yeah, I take money out of one of the accounts to pay my bills. Okay, now we are at 58 people. That's below 60, so we're going to call it a night. Let's go through these last couple questions. Carlo, 20 years of dividends prove good earnings. Yeah. No name. In years experience, what percentage time you ended up buying the stocks to covered calls? The stock price went down. They always go down. Okay, no name. If you think seriously, okay, now I don't want to discourage anyone. Really, I don't. But if you're under the impression that you're going to buy a stock and it's going to do nothing but go up, you're sadly mistaken. Take a look. This is PSX, Phillips 66, the gas station. They do oil and gas. Okay, look at the beginning. Look at a year ago. She went down. She went up. She went down. She went up. She went down. She went up. Down, up, down, up, down, up, down, up. That's all stocks do. They go up, they go down. You're going to buy a stock, it's going to go down. Guaranteed. You're going to buy a stock, it's going to go up. Guaranteed. Because that's all they do. They go up, they go down. They go up, they go down. Up, down, up, down, up, down. That's all they do. If you think they do anything other than that, somebody is lying to you. And it ain't me. I'm telling you, that's all they do. They go up, they go down, up and down. I never once had a stock come to my house, make my bed, put little candies on my pillow and say, have a nice day. They didn't do that. They go up, they go down. That's all they do. Best thing you can do is buy a good quality company at the right time for the right amount of money and to make sure your exit strategy is sound. I like my exit strategy. I buy a good company, I get my 1%, I get out and I move on. Alright, so that's it. Past 11:30. I'm going to turn it to a pumpkin. You guys have a great day. Thoughts on Google? Nope. Oh, Google Finance. Oh. I thought Google Finance had dividend calendar. You talked about that last night. I honestly don't know. I don't use Google Finance. Let's find out for the fun of it. Google Finance. Google Finance. Stock market prices, real-time quotes. I've never done Google Finance. Well, there you go. What am I looking at? You might be interested in. No, I'm not. Okay. Watch list. I don't have a new watch list. Nvidia. Lovely. Starbucks. Chipotle. Intel. Tesla. Blah, blah, blah. Hey, let's take a look at Intel for a second. Because I got a bunch of money burning a hole in my pocket and I got to invest it somewhere. Okay, it's Phillips 66. Did we finish up with Phillips 66? Yeah, she turned. Okay, Intel. INTC. Interesting. 2047, the 2050s are going 34. Ooh, let me put Intel down. INTC. Alright. That's it. Let's finish up these last couple questions. Can we copy some of your trades and how do we know when you're making them? Well, Ivan, I actually have a live trading group. Every morning we get together, Monday, Tuesday, Wednesday, Thursday, 9 a.m. Okay, a half hour before the market opens, we take a look at a bunch of stocks and then we decide to trade. When the market opens, we take a look to make sure the numbers are okay. Because these numbers here are going to constantly change. So at 9:30 a.m. Eastern Standard Time, these numbers are going to start to change. If you really want to watch as I trade, join the morning trading group. How do you do that? Well, it is right here. The 10minutetrader.com. Whoops. Okay, the 10minutetrader.com. I've had this website for over 20 years. This is a new layout, so I'm not quite 100% okay with it. Some of the links don't go anywhere yet, because I'm still working on it, and it's not my thing. Okay, but right here, live trading, and that will bring you to my Patreon, Dividend Stock Talk. And look, it's a picture of me. Okay, so let's get out of that one. Okay, you can come down here. Tells you a little tells you a little bit about me. If you're looking to strike it rich overnight, this ain't it. My main focus is simple, safe, predictable, and consistent 1% per week. That's over 50% per year. Alright? Come down a little bit lower. Right? You'll hear me say this stuff over and over again. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. More about this simple trading strategy. And then live trading, join our morning trading group, and that takes you back to the Patreon. Okay, so if you want to copy my trade, yeah, you got to join the morning trading group. It's not me. Last question. When you make a trade, do you look at the last price of the main price on Thinkorswim? No. Okay? Now, you'll see the last price is here, 2047. The bid, 2037. The ask, 2040. Now, usually, I'm going to cross Intel off my list. Usually, when the bid and the ask are both lower than the last price, the market maker is going to push the price down. When they're both higher, he's trying to push it up. Great method, fun to learn too. Thanks. Check out your morning videos too. All right, Charlo. It's not me. How do you customize your calendar to show the stocks you want? Mine shows a ton. Ooh, it's not me. That's simple enough. First off, you want to go to watch list. Okay. Top left-hand corner. Account information. Watch list. Click on watch list. The very next tab next to it. Okay. Create a watch list. Okay. Give it a name. Import your symbols. And hit OK. Okay, once you do that, come on over here, click onto this, and then your personal list right here. See, personal? These are all my personal list. 100-year-old companies, calendar spreads, dividend aristocrats, dividend champions, dividend contenders, blah, blah, blah. Those are all the lists I have. Okay? It's not me. Create a watch list. Yep. Uh-oh, no name. I missed that. So, what would be a minimum investment that could be good starting point to follow your strategy? All right, no name. My suggestion is get a paper trading account. Now, I've been trading for over 20 years. I still paper trade. Reason being is because I'm always coming up with new trading strategies, and the only way to do them accurately is to just do them and see how it turn out. Good night. Calibri. My match gets messed up when the strike price is higher or lower than the purchase price. Okay. Thank you. You're welcome. Charlo. Dell tomorrow. Now, I did not tell you to buy Dell tomorrow. Okay? Did not do that. I said that I am buying Dell tomorrow. I do not give suggestions. I do not give advice. I'm just saying that Dell looks good to me. I got a bunch of money that I have to invest. I thought I invested it all, so I'm wrong. It is what it is. So you guys have a great night, and I'll see you again tomorrow. Bye, Facebook, Instagram, bye, TikTok, bye, YouTube, bye, TikTok, bye, and down here, you guys have a great night. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for that safe, predictable, and consistent 1% per week. Have a great night.